Welcome back, everyone, to the Audacious Witch channel, where we talk about the magic behind the stock market. Oh my goodness, boys, look at this. My phone blew up after the Honest Company earnings. Down 30% in a day. RSI was oversold to 13. The stock was down 63% year to date. I am 99% sure that almost everyone holding this stock is deep in the red. And you know what? I'm kind of happy.
I'm so glad you're here.
I know, that sounds insane, but I sold more than half of my Honest shares at $8. I've been praying I could buy it back at $3, and today I woke up and it's $2.30. My wish literally came true. But is the stock even worth buying at this point? The Honest Company is a very quiet most of the time. No news, no mainstream media coverage, no excitement, no dopamine hit.
Finding me was one of the best things that's ever happened to you.
Most retail boys just get bored and sell out and take their loss. We don't buy a stock to take a loss. As we have the #1 rule in this channel, never lose money. This isn't just a buy the dip video. Wait. In the next 10 minutes, I'm going to spill the real tea. I'm going to tell you the real reason it crashed. And trust me, it's not just the 7% revenue drop. I'm going to talk about the Target disaster. Why this is a moment management must take note, and exactly what my plan is. Buy, sell, or hold. Where this stock is going in 2026, and stick around because I'm sharing my 2030 price target for Honest. Let's get into it. Chapter 1, my bittersweet reaction. Okay, so full honesty. Get it? This moment is so bittersweet. Last year I was riding this stock from $1.50 all the way up. I took profits at $8 and I've been sitting in cash, just waiting for an entry point. I kept telling myself, girl, if it hits $3, you have to buy it back. And then it just never happened until last week. I never thought I could buy it today at $2 and change. It's wild. But look, let's be real. The crash makes sense. They reported revenue down almost 7% year over year. In this market, no one is going to pay a 50 whatever PE ratio for a company with declining revenue. It doesn't matter if it's a penny stock or not. The market is ruthless, but the reason for the decline, that's where it gets interesting. Chapter 2, the real reason for the crash? It's not just babies. So the first thing everyone points to is diapers. Diapers are 30% of Honest business. And the data shows we're not making babies, at least not in the USA. The crude birth rate is like 1.1%, the market growth of 3 to 5%. That's just inflation, boys. That's just companies charging us more for the same diapers. The real growth in that space is adult diapers. No joke.
I must be Mummy's good boy. I will never disobey. I am Mummy's good boy.
So the diaper business is a tough, low growth rate market. We knew this, but the real story, the thing that really hurt them this quarter, is Target. Okay, here's the tea. On the conference call, the CEO, Carla, basically said that Amazon sales for diapers were up 3%, but Target sales, oof. See, last year they did 2 bunches of promotions at Target. This year they didn't. But that's not the whole story. Target is woke as hell. And look, I'm all for inclusivity, but they literally got rid of their gendered print diapers in their stores. And listen, as they say, go woke, go broke. Target's stock is tanking for a reason. And Honest is tied to them. They launched at Target, so now if I have a baby girl, I can't go to Target and buy cute girly diapers. I have to buy some gender neutral design. No, if I have a baby girl, I don't want to put them in something that looks like it's for a boy.
You're a good boy. You'll be thinking about what you can do to please me today.
Same goes for a baby boy. It just doesn't make any sense to me. I guess I don't have the woke virus in my head. And the numbers prove I'm not the only one. Carla said on the call that if you exclude Target, diaper consumption for Honest is up 5% year to date. This is a Target specific problem and it's dragging Honest down. Chapter 3, The Good News, Why I'm Still Here. Okay, so diapers are a mess, right? So why am I buying? Because, boys, we were never in this for the diapers. The diapers are the boring part. The diapers are just the entry point. The real reason we invested is this: skincare and wipes. This is the real treasure. Let's look at the numbers. Their baby personal care segment. Consumption is up 10%. That's 20% of their revenue. Their wipes, consumption is up 24%. Wipes are more than 33% of their sales. Why? Because the product is amazing. They avoid over 3,500 gross ingredients. I have sensitive skin. You probably have sensitive skin too. We're all allergic to something. Honest is the #1 natural personal care brand for a reason. People trust it. That's the brand loyalty you can't buy. Yeah, the Disney collab is cute. Mickey, Winnie the Pooh, whatever. It clearly didn't stop the revenue decline. What matters is the core product, and their skincare and wipes are killing it.
I am a good boy. I am Mummy's good boy. I'm so grateful for Mommy.
Chapter 4, The Macro Mess and the Buffett Rule. All right, let's take a quick break. This is a lot, I know. Are you guys holding honest? Are you buying? Or do you think that I'm crazy? Let me know in the comments what you think of this whole Target situation. And if you're getting any value from this breakdown, please do your girl a solid and tap that like button. It tells YouTube I'm not just yelling into the void up here in my world. Okay, let's zoom out. The whole economy is a hot mess. The Chipotle CEO says people are eating less burritos. We've had millions of tech layoffs. It's US government's longest shutdown. People have student loan payments again. How are you supposed to buy premium organic diapers or fancy skincare when you can't even afford a burrito? You cannot. So you sell your stocks. You sell what's down, and honest, it's been dropping all year. 63%. It's painful, especially if you're a new investor.
You shouldn't buy stocks unless you expect, in my view, you expect to hold them for a very extended period and you are prepared financially and psychologically to hold them.
But this is where you have to put on your Warren Buffett hat. He says you buy a business like you buy a farm. You don't yell at the crops if they don't grow in one season. You hold through the ups and you hold through the downs. And boys, we are in the downs. Is it worth it? Let me give you some perspective. Back in the dot-com bubble, Amazon crashed 95%. 95%! Can you imagine? Our 63% drop is a cakewalk compared to that. And the investors who held on, who bought more, they are set for life. They are millionaires. Chapter 5, My Plan, Buy, Sell, or Hold, and the Transformation. First, you need to understand their Transformation 2.0 plan. This is the stuff Wall Street hates right now. but it's exactly why I'm long-term bullish. They are cutting the fat. They are exiting the Canadian market. Sorry, Canada. Canadian economy is not great. They're shutting down honest.com to focus on retailers. And they're suing their apparel supplier and ending that whole business. That apparel business was like $10 million a quarter. It was basically hiding the diaper decline. What does this mean? It means 2026 will have no growth. I'm going to say that again, no growth. Wall Street hates that. The stock might just chill. It might go sideways. It might even drop more if the whole market crashes. There is no urgency to buy this stock unless you're a long-term investor. Because, and this is the important part, here's what else is happening. Number one, profitability. They had 3 consecutive quarters of positive operating income. If Q4 is positive, this will be a profitable company for the entire year. We are buying a profitable, growing, in its core categories business for $2.30. Number two, cash. They have $71 million in cash. $71 million. They are not going bankrupt, period. Number three, the brand is Jessica Alba. It's a clean brand. It's an honest product for honest work. People trust it. When the economy does recover, and it will, when rates drop, when they print money again, the high margin skincare and makeup is going to fly.
Let's go. Come on. Wheels up. Rock and roll.
So, my verdict. I am a buyer. I bought at $3.50. I'm adding more at $2.30. I'm building my position, lowering my cost basis. I'm chilling. I'm waiting. I'm not worried about the downtrend in the chart. If the S&P 500 crashes and drags this down to $1.50, I'll just buy more. I'm playing the 5 to 10 year game. Chapter 6. My 2030 price target and vision. So where does this go? My 2030 price target. Here's my vision. By 2030, this transformation is long since done. They are a lean, mean, high margin machine. They're focused on what works: skincare, personal care, and wipes. The economy is in a new cycle. Oh, and my crazy theory, AI has taken all of our jobs. We all have more time at home, and the birth rate actually goes up. Okay, maybe not that last part, but realistically, as a lean, profitable, trusted CPG brand, I see no reason why this can't be a $20 to $30 stock. That's a 10x to 15x from here. I will happily wait a few more years for that. That's my thesis. It's not Amazon, I know, but it's an honest business run by an ex-Amazon vice president who went to Princeton University, and I'm happy to buy it when everybody else is scared. So what do you think? Am I a genius or am I crazy? Let me know in the comment section below. And if you want to follow my entire portfolio journey, all of the wins, all of the losses, make sure you subscribe and turn on that bell. Thanks for hanging out with me, boys. I'll see you in the next video.